Today on Fear and Greed, the International Monetary Fund warns of a global growth slowdown and says Australia is just one of two major nations that hasn't got inflation below 3%. Woolworths and Coles hit back at allegations of sham discounts, and Aussie investors move their focus from Wall Street tech titans to China. Plus, more on Wisetech Global CEO Richard White and the corporate regulator suing one of the country's big insurers. Welcome to Fear and Greed, daily business news for people who make their own decisions. It's Thursday, the 24th of October, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Plenty going on today. Very, very busy show.
Yeah, big show indeed. The main story this morning, Sean, the IMF has lowered its global growth forecast for next year and warned of accelerating risks, all kinds of things from wars to trade protectionism.
That's right. It has forecast global output at 3.2% next year. Now, it's only down a touch, but anything lower isn't good news for countries that are big trading countries like Australia. The IMF says inflation globally will slow to 4.3% next year from 5.8%. That's good news. But Australia's only one of two major economies with inflation expected above 3%. So if you think of the UK, US, Canada, many of those European countries, inflation there will all be under 3%. Here, the IMF is forecasting it for 3.6% next year. Only Slovakia is the other major economy, or major developed economy, which is going to have higher inflation at 4.8%. It triggered a bunch of criticism from the federal opposition yesterday, as you could imagine. It also helps explain why we haven't seen interest rates falling yet. The IMF downgraded the growth outlook for Australia also to 1.2% this year from 1.5%. It said global risks are building to the downside. That's the bad news. And the big uncertainty really is around tariffs and trade. That's if you park the disputes, the Middle East, etc. Tariffs and trade are the major uncertainty. Think US election. Now, the IMF, I kind of thought I'd better throw in exactly what the IMF is, because it was a big moment this week for the IMF. Liechtenstein, the principal of Liechtenstein, became the IMF's 191st member. It's kind of like the parents of global economies. It aims to achieve growth and prosperity for everyone. It's looking after all the kids, anyway, 191 kids, including Liechtenstein.
That is momentous, isn't it? I don't think we've ever mentioned Liechtenstein on Fear and Greed before, so it's momentous for us too, Sean.
And we don't think we've ever mentioned Slovakia either, so there you go.
So that's two in one. Now, the figures were released ahead of Federal Treasurer Jim Chalmers heading off to Washington for G20, IMF and World Bank meetings. Surely, Washington is not the best place to be holding these kind of big things. Right, what are we, a week and a half out now from the election?
Yeah, it'd be pretty tense, you'd imagine, ahead of the US election. I don't know.
I don't understand. Sure, have it in Liechtenstein. I don't know.
Yeah, have it in Liechtenstein or Slovakia for that matter. Those economies
Perfect.
need it. I don't know. I think a lot of these international organisations, they seem to be based in either Washington or Paris, one or the other. This one is in Washington. A lot of the conversation really will be about what's going to happen in US politics. Both sides will spend up boosting the US deficit. Donald Trump, at least on what he's promised so far, is more likely to blow out the deficit more. Trump, of course, is talking about 20% tariffs on everything. Now, that will cause some consternation at these meetings. Australia exports about $16 billion worth of Aussie goods each year. All of those will be affected if Donald Trump can be taken at his word. There are other things like the local resource companies have benefited from the Biden administration's Inflation Reduction Act. That's really spending on green energy. That could well be watered down under Trump. That'll be something else that I'm sure Jim Chalmers will be talking about. AUKUS, of course, will always be front and centre of all our talks with the US. Chalmers will be pushing Australia's wares, but of course, much really does depend on that presidential poll in under 2 weeks.
Yeah, indeed. All right, moving on. Details of the alleged misleading conduct from Woolworths and Coles have been filed in the federal court. And Sean, there are hundreds of examples, but the big grocery chains are claiming that it's not them, it's their suppliers that are driving the price changes.
So example one, a bottle of Dettol foam hand wash refill at Coles was discounted, but was still on the shelves for 35% more than its original price. Example 2, a bottle of Sprite lemonade at Woolies had a discount price of $3.15, which was 34% higher than the original shelf price. Of course, the ACCC has accused the big two grocery chains of offering discounted prices on goods that had been previously marked up from their original shelf price. That's the allegations. Coles and Woolies hit back. They were both filing into the federal court over the past 24 hours. They had the same argument. They basically said that nearly in every case, just about, it reflected suppliers asking the big supermarkets to lift prices amid a sudden outbreak of high inflation. Now, I don't know whether they're right or wrong, still has to be tested, but it's a good argument. They're saying that the suppliers, because everything was costing the suppliers more because we know inflation was rampant, then they pushed it through to the supermarket chains.
It's going to be a fascinating case to watch. We have a lot to get through this morning, Sean. We'll be back in a moment with the rest of the day's business news. Sean, the corporate regulator has sued insurer QBE, alleging it failed to deliver on pricing promises made to more than 500,000 customers over a 5-year period.
The Australian Securities and Investments Commission alleges the pricing methodology QBE used to calculate premiums eroded the discounts that were promised. For example, loyalty discounts that were promised, or promoted at least, they weren't provided according to the allegations. Now, in a statement to the ASX yesterday, QBE apologised for inconsistencies in how discounts were applied. That's not an admission of guilt, but certainly when it put that out, it shows that sometimes these discounts were not uniform. QBE share price fell slightly yesterday. Mind you, it's up 16% in 2024. Been a good investment for some investors.
Indeed. The Fair Work Ombudsman, Sean, recovered nearly $473 million for nearly 160,000 underpaid workers last financial year, with more than half of the back payments made by large corporate employers.
Yeah, that means over the last 3 years, the Fair Work Ombudsman has recovered about $1.5 billion. Now, it put out its annual report yesterday. It said, the Fair Work Ombudsman said that litigations led to $21.2 million in court-ordered penalties. Big business remains a focus for the Ombudsman, though more than 3,000 small businesses received written advice on pay and entitlements. There are also 15 enforceable undertakings, mostly around back pay. A bunch of companies involved in those ones: Best and Less, Starbucks, Optus, IAG, Eagers Automotive and World Vision Australia, just to name a few.
And we've talked about this before, haven't we? The fact that these are not kind of deliberate mistakes or anything, but in the past, like a lot of the awards have been so complicated and so kind of confusing that inadvertently people can be mispaid or underpaid over quite a long period of time.
Yes. I don't know that 100% are inadvertent. I would imagine some are quite the opposite. But for a lot of big companies, I'm sure that many of these are inadvertent. But, you know, if you're a big company, you should have the resources to make sure you get it right.
Oh, I love that. We should call our show The Idealist and the Cynic. I'm the idealist. You're the cynic here, Sean.
And it just depends on what day who's who.
Yeah, exactly. We swap. Now, Tabcorp's management is under pressure to cut shop fronts as part of its cost-cutting regime.
The gaming group, with its new Chief Executive Officer Gil McLachlan, fronted investors at its annual general meeting yesterday in Sydney. It has been an awful year. That's probably just it. 2024 share price down 43%. Last financial year, $1.36 billion loss on the back of write-downs on wagering assets in South Australia and New South Wales. Gil McLachlan, former AFL boss, a relatively new CEO to the company. Now, we're in the middle of the spring racing season. Everyone should be happy about it. Well, the news yesterday, if you worked there, wasn't so good. Mr. McLachlan wants to cut costs. He said he wants a more cost-effective company, a more agile company, and he wants to unlock the opportunities within the asset base, which kind of makes a gaming company really boring when you start using that corporate speak. Wouldn't you agree?
Yeah. I think you should be using horse racing analogies.
Yeah, or something like that. Yeah, football or something.
Yeah. If we want to be first past the post, we've got to get quicker off the blocks. So, I don't know, out of the gate.
Quicker
there
off
we
the
go.
Blocks, out of the gate. That's it. One shareholder that was there is a guy called David Kingston. David's been around for a while, been an investor for many, many years. He spoke, he said, I mean, he was angry really that Tabcorp isn't competing with online competitors like Sportsbet and Ladbrokes. He called for the closure of a bunch of retail outlets, which I must say, those retail outlets, I mean, it's part of my childhood was walking past the TAB in Orange, and I was kind of scared of them because there were always men hanging around smoking. And I kind of think you go into the TAB and you see all walks of life, but they are probably anachronistic.
It's always a good place if you need to steal a pencil,
Yeah,
Sean.
that's true. You're a
If you're
practical
ever,
person.
yeah, so you can always find one. They're usually about 3 inches long, easy to fit into the pocket. Anyway, the longtime boss of Domain, Jason Pellegrino, will depart after 6 years running the online real estate business.
Mr. Pellegrino came out of Google Australia and he led Domain through 13 interest rate rises, the pandemic, and against a very, very tough competitor in REA. Domain is 60% owned by Nine Entertainment. In other share market news yesterday, the gold miners did well. The price of gold's near record levels, hence companies like Bellevue Gold, Genesis Minerals and Perseus Mining are doing pretty well. Best on the day yesterday, at least among the top 200, was Qantas. It received an upgrade from a couple of investment analysts. Its share price is up about 65% over the past 12 months. Mineral Resources share price was down 5% yesterday, 28% over the last week. ASIC is reportedly interested in revelations that managing director and founder Chris Ellison allegedly ran a tax evasion scheme for a decade. Jeweller Michael Hill, good day, reported 4% year-on-year sales growth for the first 14 weeks of the financial year. Copper Group 29 Metals, not so good after reporting steep fall in cash reserves. All up, with all those ups and downs, the S&P ASX 200 ended about flat at 8,216 points.
Sean, we mentioned Domain, and we partner with Domain. And after the show today, you'll hear the new episode of The Property Pendulum, brought to you by Domain and Fear and Greed. And the topic today is basically the 7 things to remove from your home before listing, kind of at a time when some of the heat is coming out of the market and there's more supply on the market. Sellers need to be doing everything they can to try and create that emotional connection between a potential buyer. And the interesting thing is Alice Stoltz, the national property editor at Domain, just her insights into the property market and what is going on, always interesting. So I'll put a link in today's show notes for that one. Wisetech Global's share price fell 1.4% yesterday, Sean, after yet another revelation involving the personal life of founder and CEO Richard White.
Nine Media is reporting that Mr. White had a lengthy relationship with an employee called Christine Kontos. Now, Ms. Kontos was recruited by Mr. White after the start of their relationship in 2016. At the end of their relationship, apparently, the allegation is he gave her a luxury waterfront mansion worth $7 million in Melbourne's Docklands. It's the third property that Mr. White has purchased and allegedly done so for a woman he has had a relationship with. In a statement, Mr. White said he had told the board about the relationship, though he hadn't told the board about the property purchase.
This story just keeps on going. Now, Australian investors are shifting away from putting their money into the Wall Street tech titans, companies like Apple and Nvidia and Microsoft.
They sure are. So in the first 9 months of this year, Aussie investors put more than $1 billion into BlackRock's primary US equity exchange-traded fund, and that ETF has done well on the back of a 21% return for the S&P 500 so far in 2024. But according to BlackRock and other fund managers reported in the AFR, Aussie investors are now wary. What would a Trump presidency look like? For example, a Trump presidency would probably be more focused on US industries like banks and energy. That might not help the tech companies. Mind you, Elon Musk's Tesla has done a lot of lobbying ahead of the poll, of course. Apparently, Australian investors are thinking more about China as Beijing stimulates the economy. There's also greater demand for small caps, both in the US and Australia. That play is also gaining traction. It basically means the investors are looking beyond the big tech names, and some of them are selling out of those, taking their profits and investing elsewhere.
Turning to international news now, Sean, Bitcoin is appreciating and investors put it down to the Trump trade, the idea that if Donald Trump becomes president of the United States, it'll be good for the cryptocurrency.
Yeah, financial markets are full of this Trump trade at the moment. So Bitcoin's heading towards $70,000 a unit. It's up about 60% this year. Its record is $73,797 a unit. So it's less than 5% from that. Trump has said that if he wins, he'll make the US the crypto capital of the planet. Sounds like Superman, doesn't it? Crypto capital of the planet. It
feels like you're turning into me now, just kind of finding these obscure things to comment on as you go through. I'm like, Sean, that's my job.
Yeah, sorry. Then even if he doesn't win and Kamala Harris wins, she's certainly softer on cryptocurrencies than what Joe Biden has been. So all in all, the environment for cryptos looks positive no matter who wins the election. Hence, Bitcoin is running. Otherwise, in international markets, oil fell towards $71 a barrel. That's on the back of a rise in inventory levels in the US. Sean bought petrol for $150.58 a litre just yesterday. Very happy about that. And US bond yields are rising fast as investors rethink chances of another rate cut in that economy. I mean, you think that's bad, but in a sense, it shows that there's a reduced risk of a recession. So maybe it's good. Not as good news as $1.58 a litre petrol.
It passed by so quickly, but you did just refer to yourself in the third person.
I did. I apologise.
No, don't.
It's a shocker.
It suits you. It suits you. The podcaster, the ego, the man, the myth, the legend.
Yes,
Sean.
Yes.
Oh, it's extraordinary.
I wish I hadn't said that.
Oh no, it's stuck now. I'm going to be just dining out on this one for a while. Not a good segue into the next story, actually, Sean. Dining out, McDonald's share price fell 10% after US authorities linked a fatal E. coli outbreak to the fast food group's Quarter Pounder burgers.
Yes, so 10 states have been affected. 49 people have contracted E. coli. 10 went to hospital and one elderly person died as a result. All 8 at McDonald's before falling ill. The Centers for Disease Control and Prevention said it appears connected to the consumption of Quarter Pounders. And the focus from the centre is on the fresh slivered onions and the beef patties provided by McDonald's. Now, the worst hit states are Colorado and Nebraska. It is the last thing a fast food organisation needs, particularly given it's across a couple of states. And in after-hours trading, McDonald's share price fell 10%. McDonald's, of course, is the biggest fast food restaurant in the US, or quick service restaurant. QSR is the official term in the US. 13,000 stores, $26 billion in worldwide sales. Not the biggest in Australia, though.
It's not, is it? It's in Australia. Oh, it's something unexpected.
Yes.
Subway.
Yes. Subway. Well done.
Subway. Got there eventually. One last one, Sean, a very serious one to finish on. The former boss of Abercrombie & Fitch, the fashion brand, has been accused of running a global sex trafficking operation.
US prosecutors allege that the CEO lured dozens of young male models to New York City to engage in sex acts, sometimes without consent. Mike Jeffries ran the brand from 1992 to 2014. The indictment says the now 80-year-old used his power, his wealth and his influence to traffic men for his own sexual pleasure. We haven't heard from Mr. Jeffries yet, but it's certainly a very serious allegation.
Indeed it is. All right, up next is the Property Pendulum, brought to you by Fear and Greed and Domain. It is coming up in the Fear and Greed playlist on your podcast platform or wherever you listen to podcasts, or get it at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 24th of October, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.